If you're looking for Q1 earnings analysis on Alibaba, you've come to the right place. We'll take a look at the press release. We'll take a look at forward earnings estimates over at Alibaba, see what Wall Street has in store for this company. We'll look at it from a valuation perspective. We'll look at the share repurchase or the buyback. We'll take a look at a high-level view of the most recent financials that we just got this morning from Alibaba. We'll take a look at the revenues, the profits. We'll look at the balance sheet as well. And then finally, we'll look at the cash flows. And then we have to look at this from a technical perspective because not only Alibaba has set up like this, but dozens of stocks that we're watching in these markets have also set up in a similar formation. So we've got to look at this from that perspective. What is going on, investors? Hopefully, guys are doing well out there. Time to look at Alibaba's Q1 numbers. But before we dive in, over the last year, this stock is down 50%. Year to date, down 18%. Has shown some signs of life more recently. Those Q1 numbers came in before the bell today. Revenues coming in at $30.69 billion. That beat expectations by about $530 million. Essentially flat year over year on that revenue side. That EPS side, they did beat expectations there as well. As likely, you had a drop and a pull down of the expectations based on the COVID-19 resurgence that you're seeing over in China and the way they're handling that virus. Now, the company also said that they're planning to list this stock on the Hong Kong exchange and then having essentially another listing to go along the New York Stock Exchange listing. Obviously, a lot of rumors that potentially the United States will kick stocks like Alibaba off of its New York exchanges. Obviously, if you want to buy this one and it becomes available on Hong Kong, I'd probably say your risk a little bit lower on that exchange versus the New York exchange. Now, we discussed how this company just beat expectations by a little bit. Wall Street was actually expecting declining year over year revenue growth to the tune of about 5%. They actually came in essentially flat on that revenue estimate growth, and we should see that Alibaba could likely meet their Q2 estimate at just $1 billion more than where they came in the most recent quarter. You actually see for the next two upcoming quarters over at Alibaba, really low expectations from Wall Street, just low single digit, essentially flat year over year growth. However, this one is supposed to accelerate in the Q4 quarter for Alibaba, which is essentially calendar Q1, covers things like the Chinese New Year. Well, you're expected to re-accelerate to kind of a low teens grower, and we'll see if Alibaba is able to meet those expectations. Now, from a valuation perspective, number of ways you can analyze Alibaba: price to sales, price to earnings. I have price to cash flow over here. They do have some stock-based compensation. When you back that out, it does give you a nice cash flow number over at Alibaba. I have a 5-year price to cash flow. This is on a trailing 12-month basis, so we're not looking forward in terms of our cash flow, but when the company is essentially going flat from a revenue perspective over the next 3 or 4 quarters, I think you can look at price to cash flow from a trailing 12-month basis and get a good idea where the market is valuing. Well, it's on a rock bottom for a 5-year period. Whenever this stock has gotten to around almost to the dollar, 10 times cash flows, buyers have stepped in for the most part. We're currently trading at about 11 times trailing 12-month cash flows over at Alibaba. Certainly not overvalued from that perspective. In terms of the buyback over at Alibaba, this is really nice. So in the most recent quarter, they repurchased 38.6 million shares of the ADS shares, those here in the New York Stock Exchange. The company authorized a $25 billion share repurchase program that expires essentially in 2024. They still have $12 billion under that program, so expect further buybacks. When we get to the balance sheet, you'll see that this company has plenty of cash to execute on $12 billion. My guess is they'll probably run through this $12 billion at some point before 2024 and probably buy back even more shares. Now, in terms of a high-level view of the Q1 numbers that came out over at Alibaba, what we are seeing is a deterioration a little bit in the core business over at Alibaba. You see those sales down 10% year over year. It is offset a little bit by the direct sales of those China commerce revenues. All in all, your total China commerce revenue, which is the bulk of the revenue over at Alibaba, down 1% year over year. They saw some marginal gains in the international commerce environment, and they saw nice gains in their cloud. Although when you compare this to a Microsoft, a Google, and certainly Amazon AWS, growing at 10% 10% year over year, just keeping up inflation. When we're looking at the Googles, the Microsofts, the Amazons growing at least 30% in that division. That essentially gave you a year over year, exactly almost to the dollar, flat revenue over at Alibaba, coming in at, from a dollar perspective, nearly $30.7 billion on that revenue. Again, this is for just a 3-month period. You've got over $30.7 billion. Now, unfortunately, over at Alibaba, there's this thing going on called inflation, and you see year over year, we're essentially flat on that revenue side. But notice, after we subtract our product development costs, our cost of those revenues, our sales and marketing, our general administratives, our income from operations year over year, despite, again, flat revenue, our income from operations down from 30.8, this is in the Chinese currency, down to about 25. That represents $3.7 billion on that income from operations. Again, when your revenues go flat in an inflationary environment, typically your profits, or in this case, your income from operations, probably going to go down. That is why we covered at the top of the show the fact that over the next 2 quarters, we're expecting relatively flat revenue growth, and then somehow this is going to reaccelerate into a double-digit grower. That could possibly happen, but certainly if it doesn't, you have to factor that into your valuations. Flow all the way down to net income, and in fact, you get a number very close to the operating profit, so I tend to stop right here with most companies, but certainly with Alibaba as well. Look, this company in a quarter doing $3.7 billion worth of operating profit. Now, from a balance sheet perspective, it really doesn't get a whole lot better than this. Look at your cash and cash equivalents. This is in United States dollars, over $26 billion. They also have these short-term investments. That's over $41 billion, folks. That's over $67 billion. When you factor in some other restricted cash, you've got a mountain. I mean, we're talking about a mountain of cash over at this company. From a liability perspective, not a whole lot. They do have some bank debt. They have some unsecured senior notes. But other than that, when you have this much cash and very few liabilities, boy, this is a company that can weather the storm, at least from a financial perspective. Completely different story when you're talking about a regulatory or a United States government SEC type environment. Now, from a cash flow perspective, unfortunately, we only get a consolidated view of this. The net cash provided by the operating activities was $5 billion in the quarter. I talked about how this company is trading for about 11 times trailing 12 months cash flows. If you want to annualize out this cash flow number, you get to a number very close to $20 billion. And again, you have a market cap on this one at about $253 billion. So that's where you get your 11, 12 times on that cash flow. Again, that doesn't always factor in too. In fact, you've got a mountain of cash over at this company as well. So from an operating perspective, very nice from a cash flow perspective. In the investing activities, they burned through about $4 billion. And then in financing activities, they burned through about $3 billion. Again, partly due to the fact that they executed on that buyback in the most recent quarter to the tune of about $3.5 billion. So you get about $3.5 billion shed off there. That's where the bulk of that financing activity came from. So in the most recent quarter, you burned through about $7.2 billion worth of straight cash. You offset that a little bit by generating about $5 billion on the operating side. All things being considered, about $1.7 billion flowed out of Alibaba's cash balance sheet. But when you have as much cash as they do, and if you believe that this company will reaccelerate into a double-digit grower sometime in 2023, well, I wouldn't be at all concerned about that. Now, from a technical perspective, I bet you could pull up the chart of PayPal and a number of different stocks that we've been watching in the stock market. A ton of them have made this type of move. Now, not as many of them made this violent and orderly elevator shaft type sell-off that Alibaba has made over the last year. Now, we have seen some signs of life in a lot of these stocks. What they've started to do is finally break out over and above the upper downward trend line. And that's really what you're looking for. You're looking for a break above it. That would be kind of a bullish move. A bearish move would be a breakdown below the bottom. I'm not seeing a lot of stocks outside of like Uber, I think made the move down the bottom, but I haven't seen a lot of stocks break through the bottom. Alibaba doing what a lot of stocks are doing, making kind of a bullish or a bear market rally outside of this technical pattern. That is a good sign. Now, all of you that are relatively new to the markets, don't get discouraged when the stocks make this move and you think, oh, I've missed the move. It's bottomed. I got to buy in here. We're going to have some V-shaped recovery, and this one's going to go back to $300 per share magically overnight. That is simply not going to happen. In fact, the vast majority of time, what you're going to have from a technical perspective, now, it's not going to happen 100% of the time, but I guarantee you pull up about 10 charts of stocks making this formation, 5, 6, 7 out of 10 are going to back test to the top of the channel. That's why we're leaving this purple line in. We are expecting this one to back test to there. It will also coincide with the lows that this stock kind of bounced off for several months down here at about $81 per share. It might not get down there perfectly. It might not get all the way back down to $80. In fact, it's here sitting at $97 per share. If you like this company from a cash flow perspective, from a valuation perspective, from a forward earnings estimate perspective, nibbling at these areas, not the worst thing, because I think at some point what we're going to see, instead of these massive trends that people will focus on, what we're going to focus on more is the fact that stocks have started to sideways consolidate. And this is actually a good thing for long-term investors. If we can get quality stocks to sideways consolidate for a while, you're actually buying them on the pullback to the bottom of the sideways consolidation, which in Alibaba's case would be down here at about $80 per share. Shorter term traders will sell this when it's up here closer to $100 or $120 per share. On the bull case, you're looking for a break above that. So those of you that have kind of the fear of missing out or wondering if you're late to this rally, well, stocks like Alibaba would have to push up into the 140s to really now be doing something technically different. Folks, that's a $50 move. If Alibaba is going to move $50, that would be incredible. I think the higher probability is we stay in this sideways consolidation from about $80 up to about $100 to $120. If you like this stock, you accumulate towards the bottom half of this sideways consolidation, which is essentially where the stock is right now at about $96 per share. If you like this stock, you accumulate it from 80 to 90 with the understanding you have a united government essentially here in the United States, which is incredibly rare against Chinese listed companies. And depending on how the elections go in November and certainly in 2024, stocks like Alibaba could be on their way out of being listed on New York exchanges. That's why if and when they are listed on the Hong Kong exchange, if you have access to that, I would personally believe that would be a little bit more secure place to hold your shares. Hopefully you guys enjoyed today's video. I'll be back again soon with more. Good luck with your investments.